Okay, good morning, everyone. So my name is Ben Bannatyne. I spent 18 years living in Central Europe, based in Warsaw, so I think I know the majority of you. I've spent the last 18 months in Amsterdam, where I'm now responsible for Prologis in Europe. So in total, we are around 17 million square meters. We are in the UK and 11 countries across continental Europe. Specifically in Central Europe, Poland, Czech Republic, Slovakia, and Hungary. We were the ones who left Romania before it took off, but maybe the other guys can tell us a bit about that market later. So we're in the 4 main markets in Central Europe.
Great, thank you.
Hello, my name is Tomek Kasperowicz. I've lived in Poland for over 40 years, Ben. We've just had, Colliers was present here for the last 20 years. We had a party last week celebrating 20 years anniversary. So hello to some of you who I saw last week. I'm responsible for industrial department at Colliers. We have a team of 16 people. We try to match expectations of property owners and space users into transactions. Thank you.
Great. Daniel.
Hello, I'm Daniel Franke. I'm just looking at my neighbors and thinking if I'm living in Poland the longest or hopefully not. I'm CEO and board member of Rolixus Logistics since 2010, so last 7 years. Before I've worked for DB Schenker, both in Poland and in Essen, global headquarters in Germany, but actually I've been working in more in Spain, France, Italy, and Portugal, always dealing with real estate and new investments in warehouse facilities. Rolixus, the company I'm working today, 200 million turnover. We are dealing with all of the types of logistics, so large-scale operations of road, RNC, and contract logistics, which is the topic of today's conference. So I trust I share with you some experience of lease contracts, because we signed here last year over 30 lease contracts with all of the major developers, including Prologis and Panattoni, both our biggest suppliers on the market.
Great. Robert.
Robert Dobrzycki, CEO Panattoni Europe. In Europe, we are active in Germany, Poland, Czech Republic, Slovakia, and Romania, and we hope to be active soon also in UK. We are a development company, US development company, also globally active in US and Canada. I'm living in Poland. I won't tell you how long, but long.
Bartek Mierzwiak, responsible for Logicor in Central Europe. Logicor was founded 2012 by Blackstone, so we are still in the infancy. But having said this, already changing the parent to CIC, which is an ongoing process, as some of you know. 13.7 million square meters for Logicor, so we are proud number 2 after Prologis, active in 17 countries throughout Europe. And Daniel, I'm also your landlord.
Yeah, I was just...
Good.
You are.
Yeah, well, I've definitely not been here the longest, but I did come as a student in 1985, in case that counts. Good. Let's start just with you, Ben, if we can. I mean, logistics has performed incredibly well over the recent period, and here was an example again in terms of the number of people saying logistics was hot. How long do you think that can remain? Do you think it's based on current demand, expected growth? What's your sense of what's driving that investor enthusiasm?
So as I said, I moved to Amsterdam 18 months ago, and we had the best year last year, and it looks like we'll have an even better year this year. So I assumed it was all down to myself, but I understand it's the market actually. So the market is great right across Europe. I think, well, globally it's the best market we've ever seen. The US has been incredible for the last 4 years. We thought that would tail off, but that continues. The UK, again, incredible for the last 2 years, and it looks like we will outperform there again this year. And it's now moving across Europe, so, you know, I would say France is the softer one, but certainly Germany, Sweden, Spain, Italy, all the other countries where we're active, we are seeing huge amount of demand. So I think the occupier demand is extremely strong, but even better, the supply side is much more conservative than it was, for example, in 2007. So whilst there is a lot of development going on, and you can certainly see that just in Poland, the amount of speculative space that's coming on the market is still limited. So within our portfolio, we will develop, I think this year, around 700 million euros worth of new product, but 65% of that is build to suit. And the remaining 35% is speculative, but to be honest, by the time it's under construction, the majority of it has been leased. So there isn't a huge volume of spec space coming onto the market. And that's obviously keeping capital values up. And on the capital side, there's kind of an endless supply of money at the moment looking to get into logistics. So we're raising money every quarter for one of our funds. And as I say, it's Asian capital, European and American. So we don't see any clouds on the horizon. Obviously, e-commerce is helping. The UK, we have to watch. There's obviously a lot going on there. But generally, we'll see what happens in the US, but as that continues to perform, I think in Europe, and particularly in Central Europe, we've got a number of years ahead of us before any potential slowdown.
Okay, good. And Robert, in terms of there's been a great, it was discussed earlier in the session actually with Richard in terms of the sovereign wealth funds, large players coming into the market, obviously Prologis and Norja, which was also one of the winners of the deal of the decade actually. And you've also had P3 recently and now Logicor. One of the questions earlier was, does that mean there's an end to large pan-European logistics funds? Is it possible for somebody else to build one? What's your sense of that? Do you think there are still, I know there's Log4Real who have ambitious plans. A lot of the funds are still actively trying to grow in logistics. How practical is it now, or do you think the large players have really got most of this area now sealed up?
I think there are still some platforms right now on the market, will be on the market pretty soon, especially in Western Europe. And there are some kind of unhappy buyers that didn't qualify to the final or didn't buy P3 or Logicor. So there'll be kind of additional acquisitions soon. And also the players which sold, I think they'll be potentially building a new platforms, maybe not to kind of sell before the next downturn, but maybe to kind of work through the cycle. But for large players like TPG or Blackstone, that's the way they make money. That's the way how they build business. They want huge volumes. They play through platform plays rather than real estate kind of transactions. With their ability to raise huge amount of money, that's the most efficient way to really make the upside. So I think it's going to continue. In terms of kind of a new platforms being created, yes, there was some announcement recently, but kind of starting from scratch, doing it country by country. It is a lot of work and in many cases not successful. So it's not so easy. Press release is just a tiny step. Then there is a lot of work behind it, luck and capacity to execute. So it's not so easy. Big private equity players are doing it in a different way. They acquire portfolios, large portfolios, assemble them, put the team in place, and realize the upside through IPO or kind of a exit. So that's what happened. But yeah, I think it's going to continue. This trend will continue, which proves that this is kind of the most, in my opinion, the most attractive asset class going forward.
Okay, good, Bartosz. And obviously, CIC, Logicor, very plausibly the deal of this year. Obviously, Logicor grown very quickly and aggressively over the last few years. Does that mean there's now going to be a change of strategy moving forward with new ownership? What happens from this time going forward?
So, unfortunately, I can't tell you much. And I will be more than happy to tell you more within a couple of months. But definitely the company wants to grow. So not going into details, we are preparing the plan how to grow the business, how to make it profitable. Sorry, no more details.
No, okay, but the plan is to still continue investing in the same manner and
Definitely.
Okay, good.
Just one thing, adding to what the guys said about the European market. Depending how you look at the number of square meters in Europe, which let's say is institutional, is tradable on the market. Let's make it simple: 500 million. You can go up to 800, depending how you count it. If you look at top 5 players, it's even less than 50 million square meters. So think about this: 5 players, 10% of the market. My opinion, definitely there is still the way to grow large platforms across Europe. And I think there is a demand for this from customers. They are looking for more to come.
Okay, good. Innovation has been a topic that we've talked about in sessions a lot lately. And logistics, interestingly, is one of those areas where innovation, e-commerce, technology really has touched that sector particularly. Daniel, what's your sort of sense of that? How do you see innovation impacting? Is that going to be driving the industry going forward?
In logistics, of course, the innovation is in all of the industries very important word now. We can understand this in various ways, but trying to connect this to the subject of the conference and to my colleagues who are delivering the product to us as a tenant, so logistic operators. I believe the situation today is far better than a couple of years ago. I remember I participated in a similar conference somewhere 2012 and 13, and I've been asked for a similar speech, and then basically I think Robert was there also. I was complaining because the flexibility from the developer side 5 years ago was a nightmare. Was so difficult that in some cases we decided to perform our own investment, even if this is not our core business. Today it's much better. Therefore, when it comes to innovation, we are able to achieve some solutions with developers. However, the message is this is not the end. There are certain technical specifications which are required to be delivered. From our side, this is all about reaching the growing requirement of automation. Automation is something which is a demand from our customers, which is the demand we will provide to the warehouse developers. Giving an example, something which could show you what I mean. It is sometimes related to some specific technical aspects of the building, not only the height, but also, for example, the very detailed, dedicated dimensions between the pillars. This is something which you will see on the market more and more often. I understand the requirement for standard buildings, and I'm sure this will remain the majority of your portfolio, but you have to be more open and ready to deliver dedicated solutions. Otherwise, we won't do step forward towards the automation and innovative solutions.
Okay, good. And Tomasz, obviously you're looking at the Polish market specifically. What are you seeing in terms of the market here? Is it picking up some of those more general trends of innovation, automation, the kind of demands that are coming from the occupier side? What's happening here? And then I'll broaden that out a little bit into Western Europe with the other guys. But what are you seeing in this market here?
Well, I mean, we are in a great market. As Ben said, Poland is going extremely well, but so is Europe and globally. That's one. Two, referring to what Robert said, I agree fully that industrial is the most interesting asset class globally. There is various reasons for that. There is a fundamental change in trade patterns. Specifically, I mean electronic commerce. That is contributing tremendously to the amount of space that actually tenants need. Poland is of course benefiting from that. Speaking from local perspective, Poland is a country with great potential. There is a lot of catching up. with Western Europe. We have a tremendous location. Sometimes the location was not so favorable, but as we speak, 2017, we have a great location for e-commerce, big mega sheds location. We have a great location for light manufacturing. So there is plenty of plenty of factors contributing to the growth. Plus, we have continuous interest from investors for various subclasses of industrial property. In short, I think Poland was never better in terms of attractiveness. I mean, Polish industrial property market was never in a better position. So we are very happy about it. We are very happy that we are part of it.
So my 7-year-old last week ordered a fidget spinner on the from Amazon, and as he pressed buy, he walked outside to the post box to see if it was there. So they have no concept of waiting for anything. So I think that's what we need to try and achieve.
That's a little fast, probably, isn't it? Without 3D printing in your post box, which you might have. What's your sense, Ben, of e-commerce is obviously a factor that makes it more sexy, more interesting. What percentage of the business is it for you? Is that driving the growth? And if we look at the UK, and you've said the UK was very successful, do you see what we're seeing in the UK naturally progressing to other parts of Europe?
So, Amazon is our biggest customer globally, but they only account for, I think, 3% of our rent roll. So it's a huge customer, but it's still only 3%. But generally, e-commerce in the last 12 months, I think, has been around 20 to 25% of all new transactions, and whether that's directly with e-commerce or through one of the 3PLs that is supplying an e-commerce customer, but it's still a huge amount of volume. So it's a massive part of the business. The US, obviously. UK, though, a lot of what we're doing now is around e-commerce and everything that you need for e-commerce. In particular, power. Data centers, what they do with all this data that they're collecting when you're clicking and buying stuff online. So I think it will fundamentally change our business, but maybe not necessarily the type of product that we're building. In terms of, it still has 4 walls and a roof, but we are having to provide more parking, more social areas. I assumed when Amazon opened a facility, it was going to be highly automated, and they employ, well, Robert will know better, but I don't know, 3,500 people at one of these fulfillment centers. So there's a huge amount of employment generated by this as well. So you do talk about automation, but also, more importantly, is the amount of throughput you can get through a warehouse, and that still requires people. So I think we will just see a continuation of the type of buildings we're building in the tighter markets, so around the southeast, so London, maybe Paris, Munich. We will probably start to see multi-story of some description. So Amazon, for example, in Barcelona have multi-story, but sort of internal. We're building one in Seattle at the moment, which is 2 levels of truck courts, and then the 3rd level is by lift. So I think you're going to start to see lots of different types of product for this sort of last touch delivery. But the standard big boxes, I think, are, they're here to stay in terms of sort of current specifications.
Okay, good. And Robert, one of the things that was mentioned actually in the panel earlier as well, and I'll pick up the guys on Poland for that as well, was the change from maybe out of town, slightly out of town, shabby retail or industrial parks into that sort of urban logistics. That's already beginning to happen in the UK, where you've got those kind of industrial parks. The values of those are beginning to go up quite significantly, and closing in on the same for logistics, with people on an eye of saying, okay, well, if we're going to get more frequent deliveries, we're obviously going to have something in a city, more urban industrials. What's happening in the markets that you're in with that? Is that something that you're preparing for, something that you're looking at?
Obviously, last mile logistics kind of is a big driver of kind of what we do and generally of the market. The issue is obviously, as we discussed, clients wants to kind of have one day delivery. Everything is kind of moving much faster. You need to be closer to the city center. In land constrained markets, you can't find land in a city or kind of a suburban land. So obviously, you have to convert other real estate type of kind of opportunities into logistics last mile facilities. So it will happen in the land constrained markets. But generally speaking, we are starting to kind of create a sub-team in our business to really focus on last mile, really focus on inner city logistics. It's much tougher to execute. It's much tougher development-wise. It's much tougher land acquisition-wise. But potentially there should be much more value created also there. So we are thinking about it, and obviously our big customer is obviously Amazon, and they are talking about a lot of opportunities of this type, especially in Germany. I mean, the numbers they're talking in Germany are in hundreds, and you need to have specialized team to execute on that. It's very labor intensive, but also exciting value-wise.
And just coming to you, Bartosz, in terms of the countries that you're active in, and let's drill down a little bit into CE especially. How much of an impact is e-commerce having, and how much of a desire is there in those smaller markets for that to take a big effect and begin to change the sorts of assets that you might be looking for in those areas?
I think it's similar to what Ben was saying. It's generally the market. So if you look at the CE market, Poland growing around 15% a year in terms of e-commerce. The demand is there, and definitely it's a big part of our business. I can't say it in percentage-wise now, but it's definitely like day-to-day discussions. E-commerce is very active. How does it translate into the future of the business, the way we will be looking at it? Again, can't say much, but I think what we are discussing here about the last mile delivery, it is the future of the market, and definitely the demand for the same-day delivery, 1 hour delivery will be growing. We are much less mature than US and UK looking from European perspective, but it's inevitable. It will come. Even if it comes in 2, 3, 4 years, from the real estate perspective, it's just a few minutes. So you need to prepare today.
Okay, good. And Daniel, in terms of the markets here, are you seeing a change towards the types of assets that people are looking for? So, for example, one of the trends as you begin to move more towards potentially electric vehicles, those kinds of things, then actually genuine urban logistics becomes more possible, and maybe a crossover between residential, mixed use, logistics. So it kind of changes the nature of it. How do you see that from the occupier side? Do you think there will be demand for that kind of thing? Do you think that's what people ultimately will be looking for with this kind of e-commerce revolution?
I think there is an important difference between your perspective of e-commerce, which is related directly to real estate, and the perspective we have. Bartek just said about 15% of growth. I can say we have about 70% of growth year to year in e-commerce, but that's actually our job. So our job is not to transfer this growth to the requirement of real estate. Our job is to make it sufficient and efficient. To utilize.
Daniel, did you say 70%? 70?
Yeah, I did. The reason is that we are specialized in this type of e-commerce, which is related to bigger shipments. So above parcel, above courier business, which is in simply words above 30 kilo or above half of the cubic meter. Therefore, the volume growth is very rapid, but the way we design the processes is to not transfer this requirement or this growth to the requirement of real estate, because the customers are not ready to pay for it. Therefore, we have to make it in a different way. And as you already said, the level of development of Polish market is still different than Western Europe or States. So the difficulties in getting attractive properties, not in a city center, but by close by, is not on that level as you have in London or in US. It will come to Poland, but it doesn't come so rapidly. But what I see as a very realistic and already happening chance for Poland is cross-border e-commerce. The Amazon is a fantastic example, as all of you knows. This is basically the service orientated for Western European customers, not only in Germany. They still are not selling here in Poland, and we have already some talks with the customers from Germany today, creating or performing their supply chain from the warehouses in Germany. They are considering to copy the Amazon solution due to actually both facts. As Tomasz said, actually we have the most fantastic times when you see it from the tenant perspective. The rates are very attractive, particularly here in Poland. I know when I suffer with you, but we have this advantage if you compare this to Germany or even to Czech Republic. We should use it. Still, the labor costs are attractive. So West Poland, especially West Poland, from this perspective, there is a potential still for large facilities, especially related to this type of goods which I mentioned, because the gadget you said, Ben, it's still a small unit. You will not make a huge business out of it from your perspective. But when we talk about white goods, when we talk about electronics, making those goods smaller, it's actually ended. All of you want to have a 2 doors refrigerator, a larger and a larger TV. So this volume is something which will create a business for you guys.
Okay, good. Ben, you wanted to pick that up?
Yeah, no, it was just something. We had our customer advisory board 2 weeks ago, so we have 15 top customers, let's say, from Europe. We spend the day with them and we get feedback on their business and our business, etc. And every year, or at least for the last 5 years, everyone just wanted more flexibility. So they wanted to be able to, rip up a lease in Warsaw and move that space to Wrocław or whatever it may be. And therefore, having a pan-European platform was seen as the right way to go. We then went from flexibility to labour, so hence Poland and the whole of Central Europe really became very interesting. But this year, they came up with something which we had not looked at all, which was the availability of power, electricity. So almost exclusively, every one of them said their top priority is to find sites that will have enough power to take them forward, principally because more and more people driving electric cars and will be forced to. They have to charge them, and if they have to charge them for 6, 7, 8 hours, they're going to do it when they're at work. Just the whole automation requiring more power, and now we're looking at battery storage, again photovoltaic. So I think power combined with labour is probably going to be one of the biggest drivers going forward in terms of locations, and that really again takes you back to being close to major population centres, across Europe.
So that means a lot of developments that may be in the middle of nowhere just simply aren't going to work.
Correct. Apart from, on the other hand, if you do have autonomous trucks, there's nothing to stop them driving all day or all evening. So actually the bigger warehouses could afford to be further out because, one, the trucks don't make any noise, and two, they don't have to stop every, I don't know what the current legislation is, but every 7 or 8 hours for an hour break or whatever. So I think you could see logistics closer to the centre becoming extremely valuable, and maybe the big boxes are able to stay 50 kilometres out. What happens to the stuff in between, I guess, is unknown at this moment.
Okay, and Thomas, just coming to you. Obviously, the proximity of Poland to Germany, and also the links that there are through Central Europe in terms of the kind of banana that's often talked about. Is that what's driving a lot of the Polish market, or are there separate things? Do you put it down to the proximity of goods traveling in and out of Germany? What's your thought on that? What's driving the market here?
I think it's not. I think it's not just for Poland, for the benefit of Poland, but for the whole CE region. Various reasons. I mentioned already location. So I already mentioned a good location within Central Europe. There is other factors. Ben touched a little bit rents. I think that maybe Poland is kind of one of a kind location with exceptionally low rents, but compared to Czech Republic, for example, or even Romania, who is to me quite similar. I mean, it resembles me of Poland about 10, 15 years ago, a younger sister. It's actually a second banana, because the main banana still is Western Europe. And speaking to the actual major theme of the event, will CEE be the driver? Realistically, looking at it, it will not be a driver for a few years still. We don't have a mass yet. We don't have the critical mass. We don't have the volume. We have a lot of catching up, but certainly we'll be there sometime.
Okay, good. And Robert, in terms of some of the things we've just talked about, and Ben raised the point of autonomous trucks, electric trucks, these kinds of trends. Will that have an impact on the types of assets, the sort of capex that you might have to do to existing assets? What do you think we'll be looking at in sort of 2, 3, 4 years' time?
It's obviously a good question, and there will be a big impact. I am not sure what type of impact it might have. I'm not sure anybody knows exactly how it's going to look like, but I mean, definitely we see already kind of a change in type of assets. I mean, we see this huge fulfillment centers. We see this multi-story fulfillment centers. We see last mile logistics. So this type of assets were not existing 10 years ago or 15 years ago. Now we see them on a daily basis. So generally, definitely the automation, innovation is influencing our business in a big way. We have to watch it, we have to adjust it. We can't just say that it's going to stay as it is forever. It's the same like with Uber and taxis. I mean, the world is changing. We have to follow the world. We can't just be stuck in our position. We have to be open-minded. I'm not sure what's going to be the future. If I would know, probably I would not work so hard.
Okay, good. And Bartosz, in terms of, I mean, let's drill down into some of the fundamentals. Let's talk about rents, what's happening. Do you expect rental growth in the region? And I'll come to you, Ben, just in terms of comparisons with the others. But how do you see rental growth at the moment?
Okay, there is obviously the difference between the countries within the CEE. We've touched upon Poland as a market. I think there is not much room for rental growth in Poland, apart from certain areas where the land is becoming or may become constrained. And if you look into other countries, it is most of the cases always, as Western Europe, which is much more developed market, related to how much constrained the land is. So looking at Czech Republic, we know exactly what's happening there. Extremely difficult to get land, extremely difficult to develop there. Therefore, the rents are going up. If you look at Slovak market, it's still small market, growing, but I think the rents are stable there. Hungary picking up after many years of shouldn't say misery, but like poor outcome. The last 2 years, there is definitely rental growth, there is demand, and you can see it with certain developments coming up. And Romania is catching up again after many years of doing nothing. So there, depending obviously where you are, but if you are in the right location in Romania, you can experience rental growth, and definitely the rates are very favorable. It's at the end, obviously, the question how deep the market is, how much you want to invest there, and how much more you can develop in the given country. But my simple comparison is always Germany. Obviously, it's hard to become Germany within a couple of years, but let's say we will be developing toward being Germany in 20 or 30 years as CEE, with the similar population altogether, give or take 80 million. Germany in institutional market around 80 million. Central Europe, 25 million. So there is the room to grow, and I think once we will be growing, and maybe with the new laws also coming up, the land might become more and more constrained, which can also be the case for Poland in the future.
Okay, good. And Ben, be good to pick up with you just in terms of rental growth, how CEE compares with Western Europe, and also, I guess, the potentials globally. I know that you do a global index as well as break that down into European ones in terms of rent, and that also includes the, certainly from the information that you've got, obviously from your research, the net effective rent versus the headline rents. And one of the things that was interesting in the recent one that I saw was that US effective rents and real rents, headline rents and effective rents were actually, despite there being rental growth, the gap between them was staying very similar, whereas as there was rental growth in Europe, it began to widen. And I wondered whether that was Western Europe, whether that was CEE, whether one market was changing the others. We heard already that there are differences in the Polish market, specifically in terms of incentives. What's your sense of that, and how do you compare that now that you've got a European-wide brief rather than just a CEE one?
Okay, so a couple of things. One, picking up on what Bartek said, I think barriers to entry absolutely are driving rental growth. So the UK, we've seen double-digit rental growth for the last 2 years, and that is continuing. So, with double-digit rental growth and cap rates, heading down towards 4, your capital values are increasing dramatically. So we are seeing real overall returns, which we would not have expected, to be honest, in the UK. So fantastic from a rental point of view. We're now seeing that in Germany, certainly around Munich. We're seeing it in Prague. We're doing deals in Prague now at sort of €4.5, which, to be honest, I didn't think we would ever get back to those sort of levels. So we are seeing rental growth in a number of markets. Spain, in particular, around Barcelona, Madrid. So anywhere where access to land is difficult, and particularly as you get closer to city centres, you are seeing rental growth. And as I said before, the supply is just not coming through. So, we are 96.7% occupied across 17 million square metres. We have 5 markets that are 100% occupied. So, if you're going to push rents, to be honest, now is the time to do so. Don't agree with Bartek in terms of Poland. I think there's huge potential for rental growth in Poland, but it really depends where you're starting from. So if you translate that into capital values, I think our average capital value for Poland is €540 a square metre. So for us, huge upside, I believe. If you bought into this market, as many people have recently, at €650, €700 a square metre, your returns aren't going to look so clever. So I think it really depends what the starting point is. I don't like to bring my son into it again, but he's 7, and I think even he could tell you that building a building for €1.5 rent really doesn't make much economic sense. So there's something going on in between that, there's a big gap between customer and investor expectations. We have significantly downsized our development pipeline in Poland because the margins just don't exist, but we're doing 25% plus margins in Czech Republic. So we allocate capital globally and we'll go where we can get the returns. So whilst we love Poland, we have 2.5 million square meters here. When rents grow, it's going to be fantastic, but for the time being, we'll operate that 2,500 square meters, we'll keep it occupied, and we'll wait till the rents come back.
Robert, in terms of that effective rent versus real rent, what do you see? Do you see that as different in Poland to other parts of CEE? What's your sense of it? How do you see that?
As discussed already, I mean, it's a question about barrier of entry, obviously, to the specific submarket. And I think in Poland there are different submarkets also. I mean, you can't compare Piotrków Trybunalski with Łódź inner city. So this is obviously a different story. You can do the same analysis. I mean, that's the thing. But it's true that Czech Republic is a kind of a supply-limited market. The rents are higher and probably are growing based on the volumes recently, and based on the e-commerce push. It will make Czech Republic less competitive over time, and the volume might be moving into different places. So you have a different perspective depending where you sit. If you are interested in what you do and just about the rental growth, obviously you allocate capital where there is a rental growth. If you want to kind of serve the customers, then you allocate your capital where the customers wants to be. So there is a different view of a different vehicles which are on the market, but I agree generally it's about land supply, it's about barrier of entry, but not only, it's also about construction costs, which we started to see recently in Poland slowly to go up, which was not the case for quite some time. Land prices were going down or stable, construction costs were kind of at a very low level, and yields were falling, compressing. So obviously there was a lot of room to do a lot of business based on that, but construction costs have started to kind of go up, and that's another kind of a factor that would influence probably a pressure upwards on rents, especially in locations which are kind of a supply limited. And you have to also take into account that Poland is a specific place where so much construction of infrastructure happened. So some project left without highways. So that's also a big factor, that the volume has been moving from the old infrastructure to new infrastructure. So that was also kind of creating, in my opinion, temporary kind of dysfunction of the market. But the uses on the old roads are obviously changing. They're getting smaller, they're becoming local. But for a while, it was a kind of a pressure, obviously. So you have to be specific about locations. I mean, that's Warsaw inner city versus 50 kilometers from Warsaw. It's not the same.
So maybe just to comment, just to be clear, this is not a Prologis Panattoni discussion, by the way. This is also happening in the office market. It's happening with all our competitors, to be honest. So I don't want you to get the wrong impression of this. But Poland is very specific, as Robert pointed out. It's the lowest rents anywhere in the world, if you look at them on an underlying net effective basis, which is how we look at rents. And quite frankly, we don't even care about that. If the rents are low, we have to go out and compete, and that's fine. The problem in Poland is purely down to a lack of transparency. It's in the office market, it's in the industrial market. If you have side letters, other agreements with incentives that aren't being disclosed to investors, it's impossible to have a transparent market. So if you have people buying an underlying stream of income which they believe is generating, a 6.5% return, and it turns out when the tenant leaves or renews, it's actually generating a 3% return. If they are not aware of why that is happening, that is down to non-disclosure and down to a market being less mature and untransparent. So it was one of the reasons we left Romania. It's one of the reasons that we're not developing much in Poland. It's one of the reasons why we are developing, as I said, around 700 million euros elsewhere in Europe, because those markets are transparent. You can understand rents both on an effective and overall headline basis. You disclose all incentives, including removal costs or capital contributions or fit out or whatever else you want to call it, and the valuers understand it. Unfortunately, in Poland, that is not the case. And as I said, it's in office, it's in industrial, and until the market matures and that changes, unfortunately, it's great for the customer. It is great for the trader developer who can continue to get away with it. It's not so good for the long-term investor like myself and like Logicor. So we're hoping it plays out that demand in Poland is huge. This is a great country to do business in terms of occupier demand. But quite frankly, until the market is more transparent, it's going to be extremely difficult to continue to grow our business at the pace that we would like to in Poland.
Hi. It's a little bit boring because the music is on, everyone's so happy, but I wonder whether you can be more elaborate about what can go wrong and what do you expect, what do you fear, in Poland specifically? Is it demographics? Is it access to workers? Is it infrastructure changes finishing after 2020? I mean, what's not so great?
From a Prologis perspective, I think it's what Robert picked up in terms of infrastructure has moved and improved, and therefore some locations that were fantastic 15 years ago maybe deemed secondary or tertiary or whatever today. So that is one issue, but that's more specific to long-term owners than to the market in general. I actually think Poland is going to continue to grow tremendously. It's very attractive from a labour point of view. It's very attractive in terms of close proximity to Western Europe. As I said, the infrastructure is there now. The difference between today and when I joined, let's say in 2008, was people are much more conservative in terms of how they're developing, principally because the banks aren't going to lend for speculative development. But when I joined in 2008, we had just delivered a 90,000 square metre spec building in Chorzów. Today, 10 years later, it's still never been 100% leased. So, you know, these kind of things are just pointless, and when people had too much capital and the banks were lending, you know, people made mistakes. This time, as I said, we are now almost 97% occupied, and the amount of new space is extremely limited. So even if the market stopped today, I think you'd be in a very different situation than we were, let's say, 10 years ago. So I think Central Europe, in particular Poland, great future. You know, we want to get back building as soon as possible. So once our customers are prepared to pay a bit more rent, we look forward to growing significantly again.
The biggest fear going forward, in my opinion, and it's not related to us as owners, it's more related to you, Daniel, is the demographics, people that are there available to work. But I think it's more related to the fact that there is always people that wish to work, but they want to get better salaries. So there will be certain moment, and it's already probably happening to some extent, that automation will be becoming more and more possible because there will be this turning point that it's better to invest into automation than to pay more in salaries.
You're right, Bartek, that's the fear and experience we already have. So availability of the labor, this is something which was never a case in Poland, and it is a case already, at least since last year. Automation is a solution, but up to some extent, not everything is possible to automate, and definitely not in a short time. So I'm possibly not in the majority in the country, understanding that what we need is a migration. We will need it sooner or later. Hopefully, this would be also aware to our government.
I would tend to disagree about the labor. I think the labor situation in Poland is the best out of all Central European countries. It's better than in Germany, better than Czech Republic, better in Slovakia, better than in Hungary, and better in Romania. So that's, on the relative terms, that's the best situation you can have. So that's not an issue. I think the biggest issue I see is if the political kind of uncertainty would lead to Schengen kind of changes or adjustment, or European Union not to be European Union anymore, and there would be borders back, for instance, and we can't serve from Poland, Germany. That's the biggest threat I would see. Labor, no issue. Demand, I think demand-wise, that's probably going to stay for a long time one of the best countries in Europe because of labor efficiency, because of labor cost. Our Amazon building in Poznań is globally the most efficient building within Amazon system, globally. So I'm not worried about that. Just that Amazon building won't be able to serve the Berlin lady. That's the problem.
I agree with Robert about potential Schengen issues. When Brexit happened last year, it triggered some fears that this might spread to France and to Holland. Luckily for Europe, luckily for Poland, that didn't happen. So there is people are relieved in this respect. Indeed, that would be a tremendous hit to Poland as a location. I mean, to Polish industrial logistics property market. coming back to labor, I fully agree with Robert. On relative terms, Poland is looking best. And I tend to see a glass half full rather than half empty. There is some pressure on employers, indeed, in terms of wages, pressure for wages. But on the other hand, there will be more dispensable income to spend, which means that there will be more goods needed and more warehousing space. So it's very simple.
Just one comment, guys. When the European Union falls apart, I think two countries that will stick together will be Poland and Germany, honestly speaking, because they need us more and more also. So I wouldn't be worried that much about that.
My question relates to the physical product. Ben mentioned flexibility earlier, and obviously the beauty of having a big box that you can fit lots of Euro pallets in very conveniently is all great. But then Daniel mentioned the requirements that they're now seeing for future automation. And are we going to end up with some specifically designed buildings that may not, or are we going to go to head towards some sort of European standard of new layouts or super wide-span buildings that can accommodate with a huge power content that is then going to become the norm, and that possibly that leaves the Polish market in a good position to provide lease or the most efficient space out there?
So I would say from our perspective, one of the biggest differences in the last couple of years has been cross-docks, so parcel delivery type hubs. We really struggled with our investors to get them on board that this was the way forward and this is what we should be developing in a limited way. They are now on board with that, and therefore we are starting to develop cross-docks, particularly in Italy, where Italy, Spain actually. We've done some in Central Europe. So that's a sort of new asset class for us, but very much an asset class that's going to continue to grow, and we're now very comfortable with that. Across Europe, in Netherlands, for example, we build to 12.2 meters, I think, clear height, and we have big mezzanines, which we don't do elsewhere, so it's very specific to that market for some reason. But then the Netherlands distributes pan-European wide, so there's no reason why that type of product wouldn't come to Poland, for example. So we do see variances across country. UK is going higher, 30 meters, 40 meters, whatever. I mentioned Barcelona, where they're going multi-story with Amazon. So there's lots of things happening and changing. Who knows where that will go to, but clearly it's quite challenging to go ahead and build a 4-story warehouse speculatively. So I think the sort of standard big box will stay, but certainly facilities inside are becoming more and more customized to the operator. So we just did a lease in the UK. The customer's putting in £200 million into the fit out of the building, which is probably 2 or 3 times the capital that we're putting in. So it's that type of thing that's happening.
Yeah, but we have to be careful with this automation topic, because from one hand side, these are the very dedicated projects with fully automated warehouses, and this is something which is not very coming to Poland in a large scale and won't come for a while. However, not everything has to be fully automated from the beginning. So there is a large space between a standard warehouse, as you understand this today, and fully automated space, fully automated warehouse. There are many solutions in between. So there are some specific technical changes you can apply to the building to make it more open for these automation solutions, to be able to apply them and not necessarily jump to the fully dedicated design where you require 10 or 15 years lease deal. There is something in between, and one of the things we are already discussing, and we have such a projects already running together, is to find this type of compromise, which for many investors will be still acceptable, your investors, but from the perspective of the users, something we can consider as not standardized building, which from 2, 3, 5 years ago.
So just one thing, the word that appeared on this market in the last couple of years is on our side as the owners is flexibility. When I joined in 2010, there was that much flexibility in discussion with Daniel. I think you, Daniel, agree that nowadays it's just the partnership, like two partners sitting and discussing. You tell us what you need, we tell you how much the market, the investor market can handle, and we try to come up with the best solution.
That's what I said some time ago, that the situation is far better. Of course, you are still a bit behind, but that's basically normal. It's our job to motivate you, but the difference 5 years ago was tremendous. Yet there was no discussion, no flexibility, not even a potential to discuss. And now Ben is saying cross-dock and he doesn't start to cough. So